The orb trading strategy is one of the most popular strategies in the world because it's simple. You mark the first 15 minutes, price breaks, and you trade that direction. It sounds easy, right? But here's the reality. Most traders are using it completely wrong, and that's why they keep losing. I've personally taken a live account this year. Well, I'll just show you from $100,000 to $153,000. And yes, every trade I take is live on camera, Monday through Friday with my live community. And if you're in my community, you know I wasn't even trading my cash account for most of the year. I was messing around with prop accounts, so I could have even done more than that, but that's 53%. And I think by the end of the year, I could even double it. But I didn't do it with some secret indicator or magic entry model. I did it with the orb combined with dynamic money management. And that is the real secret, because once you understand this, your trading consistency, your discipline, your psychological components, your market awareness, it all starts to actually come together. And it all stems from knowing how to manage your risk the way the pros do. So in this video, I'm going to break it all down, and I'm going to walk you through step by step the exact checklist that I use so that you can do the same thing. And by the way, if you want the full playbook, I put together a 20-minute orb training and PDF checklist that covers everything I'm going to go over. Just comment the word orb and I'll send it straight to you. All right, let's get into it. First off, let's talk about why the orb is great, but not enough on its own. So you're gonna line out the first 15 minutes of your session. You're gonna mark the high, you're gonna mark the low, and this becomes your temporary daily bias. If price breaks above the 15-minute range, then you're looking for longs. If price breaks below the 15-minute range, then you're looking for shorts. That part works. But here's where traders absolutely blow it. Let's say you get a candle breaking the high. A lot of traders don't wait for closure confirmation. They just get in right when the candle breaks, and they place a random stop right under the last candle wick or on the other side of the orb. They'll shoot for a 1-to-1 or a 1-to-2 or find some random liquidity level to get out on, and then basically pray it works out. Well, even though this looks good on paper, this is not trading. This is called gambling. The orb is just the framework. It's so important to remember this. What actually makes it profitable is what you do inside of it. Let me ask you this, and I'm going to paint the picture, okay? Price is making higher highs. Everything looks good. You got a Fibonacci on. Now, be honest. Has this ever happened to you? You get in right here. It's the golden pocket, perfect entry, only to see the market come down, grab your stop because obviously it's targeting you, right? And then you get to watch price run in the direction you thought it was going to go. It's the most frustrating thing ever. Most of the time that happens because you weren't trading an idea. You were trading a memorized entry model with a stop loss that made no sense. Something that my mentor taught me a long time ago was that pros trade ideas, not memorized entry models. How do we do that using the orb? Well, this means we're going to start with the orb directional bias, but we're going to wait for confirmation. Now, once this candle closes outside the range, maybe we're getting in right away. Maybe we're getting in at a shelf. Maybe we show a 6 candle rule. And guys, if you don't know what a shelf is or the 6 candle rule, these are things that I teach. It's all part of momentum theory. You can go learn it. It's all in my school group. But most importantly, you know where the idea is invalidated, and that's where your stop belongs. Now, just to be clear, I'm not saying that this is exactly where your stop loss should be. I'm going to show you a real example in a second, but the idea here is that this is where the trade would be invalidated. Hear me out, ladies and gentlemen. The idea, the trade idea, not just a memorized place to put your stop loss. And that's the difference between amateurs and pros. Amateurs chase entries and pros execute trade ideas. But step 1 means nothing unless you understand step 2, and that is grading your setups. Now, I'm not gonna lie, y'all, this one changed everything for me, so pay attention. Most traders are risking the exact same every trade. 2 contracts here, 2 contracts there. No matter what, they're risking the same amount. In my opinion, that's lazy trading. This is not going to scale your account very fast. So let me show you what the pros do. Pros will grade their setup, okay? And basically an A setup, something with good structure, good momentum, nice breakout volume is gonna get anywhere from 2 to 4% risk. Now that's just me. You can risk whatever you would like per your account. B setup is gonna get something more like 1 to 3%. And by the way, part of good discipline and money management is to just say, you know what? Today is not a trading day for me. Those happen. And this is how you survive long enough to catch trades that make up your week, your month, your year. Think about it like a casino. Do casinos win every single hand? No, of course not. But they size consistently around probabilities. It's the same thing here. You don't need to win every trade. You just need to put more weight on the ones that matter. Step 3 is ladder responsibly. Now, let me be clear. I'm not just talking about mindlessly adding to losing positions. That's how people will blow up accounts. I'm talking about having a clearly defined invalidation zone. And if price pulls back to that zone while the idea is still valid, you can add responsibly. Let me show you a beautiful example of what I'm talking about. In this example, a 5-minute candle body closes to the downside outside of our 15-minute range. Price pulls back to a shelf, and you can see a secondary trade was added. And this is just an extension of this secondary trade position. So we have our first trade and our second trade, but the most important question here is, where is our stop loss for these trades? And this is where our custom TMT bands indicator comes in. The invalidation zone for this trade idea was just above the bands. If price were to make its way out here, the trade idea is no longer valid. And this trade worked out beautifully. Some people held for even longer. But it's like this: if my orb bias is intact, which here you can see that structure was all the way at these highs, it had not been broken, and shelves are forming and price is dipping back into my zone, I will add with purpose. And again, if price pulls back to my invalidation zone, then I'm out. No questions asked. This is how I've kept my losses relatively small this year, and it's why my win rate sits above 70% while most scalpers struggle to hit 50. Now, step 4, one of my favorite parts: trail with shelves. Every time price runs and pauses, and then pauses and pauses, it creates a shelf. These are prior swing points that have been broken by price action. And all you're doing is waiting for price to retest this shelf. Then you are taking your trailing stop and you're placing it inside of the shelf once price has done its job and retested. So in this case, price is up here. I'm waiting for it to retest the shelf before I take my stop loss and trail closer. This is how you squeeze the maximum amount of profit out of your trades. No other method comes even close. So instead of guessing a target or setting some random take profit level, the market tells you when it's done. And this is how you catch 50, 80, or 100 points or more, not by calling tops or bottoms, but by letting the shelves guide your trail. I mean, would you rather take one small profit and then watch the market run without you? Or would you rather let shelves trail you into a massive winner? That's how the pros do it. So let's tie all of this together. The orb is giving you your temporary daily bias. There's a few different entry models, but dynamic money management and your grading system makes it profitable. You're trading the ideas, not the model. You're grading your setups, you're laddering responsibly, and you're trailing with shelves. And here's the best part: once you understand this, your psychology gets 10 times easier, because now you're not panicking every time price wiggles. You know exactly where you're wrong. You know when to size up. You know how to ride the moves without fear. And that's the difference between hoping and actually trading. So what happens when you start putting all this together? You stop blowing accounts, you stop second guessing every entry, and you finally start stacking consistent wins. That's how I turned 100,000 into 153,000. That's how so many traders in my community are passing prop firm challenges and growing their own accounts. And that's how you can too. So here is your next step. This is great and all, but don't just watch this video and move on. Start applying it. And if you want my full playbook, I put together a 20-minute orb training along with a PDF checklist, back testing. Comment the word orb in this video and I'm going to send it to you. This isn't about chasing entries. It's about trading ideas. When you do that, consistency is no longer a dream. It becomes your reality. Thanks for watching, and I'll see you in the next one.